Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. Hey, we were talking insurance talk with Richard Tonica over at the Richard Tonica Goosehead Insurance Agency right here in the DFW area. By the way, he covers all of Texas. He's located right here in the DFW area in Arlington. And you know what? The next show, we're going to have a stat for you because we were talking in the break about how many couples lose, one of the spouses loses their wedding ring on their honeymoon. And we know, we've heard stories about this all the time. We know it's got to be an astronomical number of people to do that. And they probably haven't gotten their stuff scheduled yet. And they need to do that before they go on the honeymoon, because how many diamond rings are sitting at the bottom of the ocean? And so Richard's going to get that information for us. Don't let that happen to you. Hey, folks, we're going to hit on into some mortgage talk here. We got Terry Wagner here in studio. And where you can reach Terry, phone number direct 866-607-5667 for all of your mortgage and refinance and Texas cash out needs. How we doing, Terry?
I'm good. How are you, Mike?
I'm doing pretty good.
Good.
So also, if you're going to call and ask some questions to us, talk to Terry, the expert in all things mortgage, 888-787-KLIF. So you can give us a shout. Don't forget.
Yeah, give us a call. We want to answer all your questions for you. Okay, so today I just kind of wanted to bring up a program that we have as Supreme Lending, FHA Back to Work program. So this is a program that allows for some exceptions for maybe some bumps and bruises on your credit that you had, but you had these bumps and bruises specifically because of job loss or loss of income associated with a particular line of work. So you're working somewhere, you get laid off there, you go to work somewhere else, but there's a significant decrease in income. This program kind of covers that for you and allows for us to overlook some of those bumps and bruises in a shorter amount of time.
Okay.
So an economic event is what we're going to call it. So an economic event is when something happens beyond the borrower's control that results in a loss of employment, loss of income, combination of the two, and causes a reduction in your household income of 20% or more for a period of at least 6 months. So those are the kind of the guidelines that we set this program up on. Income by 20%. Length of time by 6 months or less. 6 months or more.
Or more, okay.
Yeah, okay. So there's some kind of restrictions on what we have to do on this program, just kind of set it up. There is a 30-day waiting period after the borrower takes a housing counseling session that we have to wait before the loan application is done. So back from when we've talked before about what an actual loan application is, there's several pieces of the puzzle that we have to make it a full application. So that does not mean that you can't call me and say, hey, I want to talk to you about this program, and we can certainly gather the information. But one key component to a loan application is I have to have a property address, which means we have to have a contract. Mm-hmm. So if we don't have a contract, it's not a loan application. Okay. So call me with your questions. Hey, this is what happened, Terry, and we'll go through the whole scenario, and that's not actually a loan application. And we at that time can tell you, here's where you need to go for your housing counseling that you need to take. So you take that course, then we have to wait the 30-day wait period. Then we can have a contract on something. Okay. Very important.
Yes. And of course, there are going to be, with any program, there could be a few hoops to jump through.
Oh, yeah.
But well worth it, because it can get these folks back into a home quicker than they think.
Right, because one of the things that this does is, okay, so these economic events that happen, okay? So you've lost your job and you were out of work for a while and you took a job and it was less income and you're trying to get things going again. But let's say you had collections and judgments that happened as a result of your loss of income. We just have to verify and document that these collections and judgments were the result of this economic event. And we can kind of overlook those. Foreclosure. Right now, if it's not on this particular program, foreclosure, you could have to wait 2, 3, 4 years, 5 years. One of the programs is a 7-year wait time period for a foreclosure. 12 months on this program. A minimum of 12 months has to lapse since the date of the foreclosure or deed in lieu of, and that's basically the same thing as a foreclosure.
Right.
Since the economic event. So that cuts your wait time in half.
Yeah, that's huge.
Yeah. Short sale, same thing, 12 months. Bankruptcy, same thing, 12 months on a Chapter 7. And then Chapter 13 just has to be discharged for 12 months. So it's a good wait period as compared to some of these other programs that are out there and available.
Absolutely.
Okay. So we have to have a minimum of a 620 credit score. That's kind of one of the little hoops that we might have to jump through and get the credit score to a 620, because if you've had a foreclosure or a bankruptcy or any of these items, you may not have a 620. But there are ways that we can work to get the score where we need it to be.
Yeah, I mean, if you have had an economic event,
right,
then your score may have taken a bit of a dip. So
that's
we
correct.
might have to address that.
And you have to reestablish your credit a little bit.
Right.
It's making good decisions about your particular situation, and we can certainly help you with. I'm not a financial advisor by any far stretch, but we can certainly advise you on steps that you can take. So let's say this is happening to you right now. Call us so that we can set you up for the next 12 months.
Right.
So maybe in a year, it's something that can take place.
Yeah, absolutely. Or if it has just happened to you. And look, these economic events can really be a number of things. Maybe, like you say, you lost your job. That's obvious, number one. But maybe took a decrease in pay.
Right.
Maybe you had to take a lateral move within the company due to corporate restructuring, whatever the case may be. Maybe you had a second job and you lost the second job.
Right.
And you're looking for that second job again. Maybe you got divorced. You were always on 2 incomes. Now you're down to 1 income. Maybe you had an injury, and so you're on disability. Right. Maybe one of your disability payments has gone away. Maybe you're a veteran, something has changed there for you. There's lots of different types of, economic events that can occur in your life. Maybe it's just a family member has gotten sick and medical bills.
Right.
That happens to a lot of people.
Right, and in our industry, when we're looking at credit, medical bills is not necessarily something we have to look at and consider when considering your application. It will affect your credit score if you've got medical bills on there that are recent. But when I am looking at collection accounts overall, if it's a medical collection, I don't really have to pay that much attention to it because it's not something that's going to have to be taken care of or paid.
Right.
So keep that in mind.
So if these things have happened to you recently or you're in the midst of this, absolutely give Terry a call, and don't think that you're shunned for life and have to go live in the corner.
Right.
We're trying to tell you folks that home ownership, it is the American dream, and it is for everyone. And this is a great program for people that have gone through some trouble, and look, we can take care of you. Is that a caller for us, or can you check that? Keep going, Terry. Okay.
So really 12 months is our time limit that we're going to be looking at here for this program. So I would certainly encourage, again, if you're not there right now, give us a call. Let us go through the whole process and make sure that when you get to that point, your credit is reestablished, your credit score is where it needs to be. And we've got the debt ratios that we need because there's a very strict debt ratio. And debt ratio is really important, too, because we need to kind of let the underwriter know you're not overbuying. You've just gone through an economic event.
Right.
And we want to say to the underwriter, yes, we've got this under control. We know what we can afford and what we can't afford. And so the debt ratio is really important, too.
Yeah, absolutely.
And we can talk about all of that and possibly put a plan together where you're paying off some debt over the next few months, and that will help reestablish your credit as well as you pay some of those credit card debts down and things like that.
Absolutely. Folks, we're going to take a short break, then we're going to come on back, and then we're going to talk more mortgage talk with Terry. Folks, Inside Real Estate, come on back in a few.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, welcome back to the house. Inside Real Estate, Mike Kruizinga. Time for more mortgage talk with Terry. Let's pick up where we left off. We're talking about the back to work program.
Right.
And folks, if you've gone through an economic event, and like we've said, it could be any event that has impacted your bottom line in your household. It could be a medical event, a disability, loss of job, loss of a second job, whatever the case may be. A spouse lost their job, whatever the case may be. And you're trying to rebound, and you're thinking, oh man, we were almost there. We're almost about time to purchase a property, but then this happened. You're not going to, call the experts, call Terry. She's going to go over this program with you. Don't think the American dream is lost for you, and don't think that, oh man, we're just going to have to keep renting forever, because folks, the rents keep going higher, the sales prices keep going higher, but the interest rates are still good right now. Still a good time to get in there and buy before it gets too crazy. And this might be the thing for you to take advantage of with this back to work program.
Well, and I kind of wanted to compare this program to some of the others. So if you're not utilizing this program, so if you are just doing a straight FHA and you don't have this, we don't at least take a look at the guidelines and see if you fit in this back to work program. An FHA, if you have a foreclosure, it's 3 years after the foreclosure. On a conventional loan, it's 7 years after a foreclosure to do a conventional loan after you've had a foreclosure. VA is 2 years. Excuse me. And again, we're 12 months on this one.
Right.
On foreclosure that's included in a bankruptcy. 3 years on the FHA. Now that's 4 years on a conventional, still 2 years on a VA. Chapter 7 bankruptcy, 2 years on an FHA, 4 years on a conventional, and 2 years on a VA loan, 12 months on this program. So it's kind of a no-brainer to at least take a look to see if this is something that works for your situation.
Right.
Again, we have to have a 620 credit score. We have to have 12 months worth of 0 over 30 on your rental or your current mortgage if you're still in your house and you had a bankruptcy or something along those lines. We still have to have 12 months, no late payments on that. Mm-hmm. And then you have to have one borrower that has reestablished credit over the last 12 months. So if you had this economic event and you just kind of withdrew from the credit market altogether,
right,
this program's not going to work. We've got to get you back in the credit market. We've got to get you a couple of credit cards that you charge a little on and then you pay it off, and you have to reestablish that credit. We have to get you back out there. So again, this is something that I would want someone to call me just after this event has happened so that we can set you up and put you on the right path to a year from now you're able to purchase a home.
Right. Yeah, and look folks, life is tough enough, and you go through events that can be discouraging, and you get down, and then from a credit standpoint, you can have the tendency to, like you say, Terry, withdraw.
Right.
And you just don't, and sometimes you start to let some bills go, and you're almost contributing to your own demise there. Don't let the frustration get you down. Just deal with it. Focus on what you have to do, and talk to Terry. And look, Terry's going to give you some free advice,
right?
of how to get back on track.
Right. Well, and it's time to put your big boy pants on.
That's right.
And let's fix this.
That's right.
Because like you were saying, a lot of people do that, where if they have one thing that happens, they just kind of let everything go.
Right.
And that doesn't have to mean that you can't purchase a home ever again. There are situations that happen, and they happen to a lot of people. You're not the only one that it happens to.
They happen to everybody.
Yes.
And
life happens.
Exactly. Life happens every day. And, one thing happens to you and you're like, well, my credit's shot already. So, screw it. I'll just let the rest of these things go, let them slide, or maybe I'll pay them late.
Right.
Hey, one little bump is no big deal. That can rebound. Your credit score fluctuates just like everything else in your life.
Right.
It's an up and down, ebb and flow. And, look, folks, credit score isn't going away anytime soon. And you really should kind of pay attention to it all the time, not just when you're about to buy a house. But, look, this is a great program. If you had some events happen to you or are happening to you now, Yeah, give Terry a call about it.
And I have a lot of customers. I kind of just want to bring this up too, because this happens a lot where, they get on this Credit Karma or some of these other credit providers, I guess is how we'll describe that, just over the internet, that are giving them credit scores. And those are not true credit scores. Those are the scoring models for those types of companies are so much more lax, I guess, than when you're having your credit ran to purchase a home or to purchase a car or to purchase any major life event, I guess.
Yeah, because they're not evaluating you as a risk.
No, they're not.
To
Their
give you
evaluation is different
Right.
than when you're purchasing a home. So just know that when your Credit Karma or any of those other websites that provide you your credit score, when you get those credit scores, your true credit score is probably 20 to 30 points lower than that. But it doesn't mean, again, that it's not something that we can't fix and get a game plan together. It's always I always tell my customers, we may not be able to help you today, but that doesn't mean we can't help you.
Right.
We can help you move forward so that somewhere in the future you can purchase a home. It may be 12 months from now, but maybe it's only 2 months from now. We don't know until we pull that credit, because that is our starting line.
Yeah, I mean, maybe you have a 550 right now. Maybe you have no FICO at all, but doesn't mean in 6 months, 9 months, a year that you can't have the magic 640 or better.
That's right.
Or in some cases the 620 or better. So, like you say, put your big boy
That's right. Did you
pants
like that, Mike?
on. I love it. Yeah, big boy pants on, and strap them up, and look. Do you want to just be a renter for life?
Right. I took an application this week, and the person has rented their home for 23 years. I just had to stop for a minute. And why? Why would you rent, especially the same home? You just completely
that thing's paid off.
that guy's mortgage
You did.
for him. The whole mortgage. Why would you do that? You have no equity. You have nothing.
Right.
That's crazy to me. And it doesn't make any financial sense at all.
No, it does not at all. And they could have had the home by now. So don't do that to yourself, folks. And just because, maybe you think, oh, my credit's shot, so you just, you keep going about life, and keep swimming in the same circle. Well,
right. Yeah, that doesn't work.
Doesn't make any
and
sense.
It's not going to make any sense to your financial future.
Well, a lot of that time, I mean, when you're purchasing a home, you're being able to purchase the same home that you'd be renting for less than what you're renting it for.
Absolutely. I do applications and mortgages like that all the time, Richard.
Yeah.
Where their mortgage payment is actually less than what they were paying for a rental home or even an apartment in some instances. And look, when you're renting, you still have to come up with
security deposit,
first month's rent,
pet
last
deposit.
month's rent, pet deposit. You still have to come up with all of that. So, and then we've talked about it 100 times on the show. There are programs. If you don't have the down payment, we have down payment assistance programs. So it just doesn't make, to me personally, it doesn't make any financial sense not to at least build equity into your future.
Right.
Because that's what you're doing, is you're providing yourself with some equity for your future.
Yeah, absolutely. American Dream, folks, it's open to everybody. You just got to, pay attention and give us a call, and we'll take care of you. Folks, hey, Terry Wagner, she can take care of all your refinance, Texas cash out, and all your purchase needs. We've just been talking about the Back to Work program. Terry Wagner over at Supreme Lending. Hey, her phone number, 866-607-5667, or just go to the website and connect over.